All right, hey guys, continuing in our video series. On Wednesdays, we do Mailbag Wednesday, where we talk about a common question I receive as a CPA, or sometimes even actual questions. But today it's a common question I get, and that is, how does the self-employment tax work? So try to unpack this very quickly, give you some concepts you probably already know, and then tie these things together. So everybody generally has worked for somebody and had a W-2 wage, right? When you have a W-2 wage, you'll notice they, by law, withhold Social Security and Medicare tax from your paycheck. What you don't know, and that's if you're an employee, what you may not know is that your employer also matches those, right? So it's 7.65% between the between the Social Security and Medicare, 6.2 for Social Security, 1.45 for Medicare, and your employer will match that. So it's a total of 15.3% that needs to be paid in payroll taxes. Now, that has nothing to do with your tax return, income taxes, etc. That is the payroll tax. So 15.3%, remember that. Well, when you're self-employed, not an S Corp, so think about like when you have a side hustle or an entity that is unincorporated, or an LLC with only one owner that hasn't made an S Corp election. When you file your taxes, let's say you're a consultant, you're an LLC, but you haven't made an S Corp election, and you make $100,000 net, right? So income minus all of your expenses, your deductible expenses, you have $100,000 net. Before you even pay income taxes, you will pay the self-employment tax on that $100,000. It is 50, give or take 15, and there's some caveats to what I'm saying, but that's why I'm saying give or take. It's roughly 15.3% on that net income as a self-employed person. Now, the reason I gave you the example in the payroll tax is because everybody kind of understands that. And when you move over to the self-employed world, not only are you the employer, but you're also the employee. So you pay both sides of that. On the $100,000 example, you pay 15.3% on that bottom line because you're both employee and employer. So something to consider: when you're an LLC that's taxed as a partnership and you work in the business, you will have self-employment income, meaning whatever net you will have this self-employment tax or payroll tax. When you are a sole proprietor and you make net income taxable, you will have this tax. So the reason people elect to be an S corporation is because, let's work that $100,000 net example I gave you as a sole proprietor. Well, let's just say you would elect to be taxed as an S corporation and you make $100,000 net. In that example, you could pay yourself a $60,000 salary, and then the $40,000 left would not be subject to the self-employment tax. Now, you could see how people would be incentivized to have their salary be lower, right? Well, the IRS knows that game, and they make you pay yourself a reasonable salary. That's a discussion probably for another video. But the point is, when people say they're forming or electing to be an S corporation, what they're saying is they want to take some of their income in the form of a salary where the payroll tax is known. Like on 60 grand, I know exactly what the payroll tax would be. And then the remainder that they get, that they take out in distributions, is not subject to the self-employment tax. So just to give you an idea, when you're thinking self-employment tax, think payroll tax, and then it's the employee and employer share, and you'll start to understand how that works. 15.3% would be the takeaway here. So hope that helps you. Very common question to get, something that people often misunderstand. So if you got a question or a suggestion for a future video, I'll certainly take that. Drop it in the comments below. Otherwise, we'll see you tomorrow on Tax Tip Thursday. All right, guys. See ya.